Hey traders, this is Shogun Chat for 7. I train traders how to trade in harmony with the market. Today is Friday, 18th of October, education time. Okay, trading education time. I we are we are in the third week of the Chat 247 Wave of Success boot camp, and I want to share some insights with you for those who are watching us watching us on YouTube. Okay, the idea of trading is we trade the price. Okay, and what is price? Price is only the perception of traders. Many people will tell you the the what moves the market is the imbalance between buy and sell order. All those things are good, but what we believe the price is because the forex market is determined. The price of any financial instrument is determined by the perception of traders. If the price is at the high and it represents good value for them, they will continue to push the price up. But if it's at the high and it doesn't represent good value, they will start to take profit. And new traders that sees that price as a fair price, they will start to sell and the price will come down. The evidence is visual. You can see it on the chart because the chart is a representation, is a graphical representation of price. Okay, and the example here we have yesterday the price made a high and it does not represent good value for the buyers. They start to take profit and the seller stepped in and created a downtrend. Successful selling, making a lower low, lower high, 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 lower low. Then it gets here. But the overall trend you can see from this low that started on Tuesday, the 15th of October, is still to the upside. And we know one of the truths that we know, or that the truth that we teach, that we bank on into our students, is a trend will not travel in a straight line. This is a trend from this low all the way to this high. But on its journey, price is making a high, a low, a high, a low, a high, a low, and a high. But it is still going in one direction. And these pullbacks, these discounts, these retracements are opportunity for us to join in the direction of the major trend, which is to the upside on this 5 minutes chart. So where we are right now, I want to do a little bit of analysis and if possible, we can take a trade. Okay, so we've analyzed this is the last high. We've seen the sellers came in after this high was printed. And now what we saw from here is an indication that the buyers are coming in again. Why did I say that? The highs that were left during this mini downtrend or this pullback, those highs are what we call the structural points. Those highs here, this one's here, this one's here, this one's here. And as you can see, the last sellers, the last group of sellers that were successful in this mini downtrend or this secondary trend correction, those sellers have been knocked out. You can see price has traded above them. This change of behavior is the first thing we want to see for a trend, or before we can consider a trend as resuming back in the direction of the trend. If I take you back on the previous things that that has happened, you remember also, and I say this all the time, it does not mean the same thing will happen again. That is one of the key fundamental truths that you must understand. But you can see here, this is an example. Price came, they were selling, 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 selling. We had the first attempt there. Then they came and traded above the last structure, followed by a pullback. The pullback did not take the low that was created by the sellers, and there is your valid entry. Okay, so what we have now, we are seeing the same thing happen. The first intention, the buyers are coming in again. They have already knocked out the last couple of sellers. They've given us a pullback. We are now seeing a higher low. Okay, before what we can see here, These lows are lower lows and lower highs. So what we've seen now is higher highs and higher lows. Compare this low to the previous ones. Okay, what is a trend? An uptrend is a series of higher highs and higher lows. We've seen higher highs, we've seen higher lows. We are not seeing, no longer seeing lower lows or lower highs. Last action is higher highs, higher lows. And also remember the trend will not travel in a straight line. So people will ask for discount. So what we can see now is a discount to this move that broke these last two structures. So for us, we want to engage this trade using a simple tool called the Fibonacci retracement. So I will draw from the low, the starting point of the wave that disturbed the sellers. Okay, and we are looking to capture the buy zone. This here is the buy zone. Let me remove the, here is our buy zone, and we have a line here which we call the deep correction, because they may come to the deep correction to take the liquidity out here, because you can see what we have here. We have a internal higher low here, and some people actually place their stop loss here. And trading is all about taking liquidity anyway, because this is what gives the banks the best entry. Okay, knock the people that entered at the first time, knock them out, and they move the price in the direction of the trend. So now we've seen a structure broken in here, but we are still trading at the higher low. So our expectation now is, if price starts to come and close above this first higher low, now we now having a higher lower low inside an uptrend, that will be the best entry for us, and we want to take a trade once we see a candle close above this line. This is a 5 minute chart. I can't remember if I mentioned that. Once we see a close above this, let me make this big a bit. So once we see a close back inside this line, this green line that I drew, we can label that as buy point. Okay, that will be our buy point. All we are looking for now is a close above this buy point. Then that will be a buy. We will place our stop loss 1 or 2 pips depending on the spread. This one is 2.2, so we put 2.2 minus the low. Okay, and that will be the initial entry for the first trade in this potential uptrend resumption. Okay, we have a momentum high here. Another rule that we trade by is momentum precedes prices. Once you see a momentum, you see a trend in the direction of the momentum, you take the trade. No question asked. We don't predict the market, we react to the information price that the price is giving us. So the information we have now is that this trend is resuming back to the upside. Okay, and this is a normal correction. This is actually one of the pattern we take. This is a corrective wave pattern. Okay, something like this. If we come back above here, we can take the trade, first entry. Okay, that will give us a leading move followed by another retest. Okay, and that will give us a break. That is a pattern. Okay, for, and that is the way price behaves. Do you remember, people will always do the same thing over and over again? So the idea of trading this way is to understand the underlying reason why the price behaves the way it behaves, and by observing the price structure we are able to do that. Okay, and that is what we do. This is basically what we do, or what I try to teach people at Chat 247 Trading Academy. I hope this has been useful. My name is Shogun Chat 247. This is one bonus education piece that I'm giving for my YouTube followers. If you like what you see, join us on Chart 247 Academy. We mentor people, we train traders to trade in harmony with the market. Have a successful trading week and God bless.